students, now we are going to see the accountancy class 11, subject accountancy, chapter 10th chapter, topic depreciation account. Look at here, now we are going to see the straight line method. Actually, this is in January 1, 2016, payment to vendor for the purchase of machinery 1 lakh and transportation cost is 1000 and installation cost is 9000. So 1 lakh plus 1000, 11,000, 11,000 plus 9,000, 1 lakh 10,000. Okay, so that 1 lakh 10,000 you have to write it over here, and estimated scrap value is 5,000. That 5,000 is here. So next is the 10-year is the estimated life, like a format wise. Okay, so that is in 10. So 1 lakh 5,000 minus 10,000, because this is in minus symbol. So that's what. Okay, so 1 lakh 5,000 divided by 10, 10,500 per year. So rate of depreciation per year, amount of depreciation divided by original cost. So what is the amount of depreciation here? 10,500. The 10,500 you have to write it over here. Original cost is 1 lakh 10,000. That 1 lakh 10,000 into 100 is the like this format amount. Okay, that 100. So we have to calculate 9.55 percentage. Look at here, like this one note, like a cost of the assets, purchase price 1 lakh. Transportation cost 1000, installation cost 9,000. So totally 1 lakh 10,000. That is, we have to take it over here. Okay, so you have to write like a journal entries. How you have to write means like a machinery, like this 2 is the same. Okay, so like that type, first one is the machinery account debit 1000, because machinery cost is like a 1 lakh. Okay, that 1 lakh you have to write over here to bank account 1 lakh. So machinery account debit to bank account credit, that is 10,000, because that is in, look at here, like that 10,000 totally for this amount, like a 1000 plus 9,000, 10,000. Okay, so that 10,000 you have to write it here. Machinery account debit to bank account credit, transportation and installation, they have to mention over here. Okay, the transportation amount and installation charge amount, both the amount cost included on purchase of machinery. Next, December 31st, depreciation account debit to machinery account credit. So this is in 10,500. How we have to calculate this 10,500? That is, look at this, like this places. Okay, look at here, 10,500 per year. That is an amount of depreciation. Next one is, look at here, 10,500 and 10,500, profit and loss account also. Okay, so profit and loss account debit, depreciation account credit. Another two thing, depreciation account debit to machinery account credit, the same amount. So profit and loss account debit to depreciation account 10,500, 10,500. Why this 4 is coming the same? Because this is in December 31st, that is in 2016. Okay, this is in 2017, December 31st. So they are asking the question itself, 2 years calculated amount. Okay, so that is in machinery cost, another spent amount. After that you have to write it in the two things, like a 2016, after that 2017. Like what is the entry you are writing, the same entry you have to write it in the another year also. Okay, the same amount you have to write it here. Okay, the amount is different means you have to write it in the different amount, but this like a straight line method, the same amount will come like a year by year. So this first sum is completed. Okay, so this is the basic thing. Okay, next we are going to see the second sum. Okay, look at here, like illustration 7, Ramu brothers purchased a machine on 1st July 2016 at a cost of 14,000 and spent 1,000 on its installation. The firm write off depreciation at 10% of original cost every year. The books are closed on 31st December every year. Given the journal entries and prepare machinery account and depreciation account for 2 years. Actually, this is the cost of the assets is 14,000 price. Okay, installation cost 1,000, totally 15,000. So like they are asking like the books of closed 31st like a December every year, as well as the firm write off the depreciation at 10%. So 2016, like machinery 14,000 to bank account credit. Machinery account like a spend. Okay, installation and expenses on machinery included, that is in 1,000. Okay, So that installation charge. So next is that December 31st depreciation account data to machinery account credit. So how we have to calculate this? 15,000 into 10 divided by 100. Actually this 15,000 is this both the amount. Okay, look at here, this 15,000, that we have to take it over here into 10 divided by 100. Like this 10 divided by 100 is, look at this percentage students, this is 10. Okay, so 10 divided by 100, this percentage, and 6 divided by 12. How we have to calculate the 6 divided by 12? Because like they are, Ramu brothers purchased their machine on 1st July. Okay, so 1st July, when they have to completed this? December 31st. So 1st July to December you have to calculate. July, August, September, October, November, December, 6 months. Okay, so that 6 divided by 12. So how many months in a year? 12 months. So 6 divided by 12 you have to calculate. So totally 15,000 into 10 divided by 100 into 6 divided by 12. Okay, so like that you have to calculate. The answer is 7,000, like 750 only. Okay, so depreciation provided. Next is that December 31st profit and loss account debit, depreciation account credit, the same amount you have to write it over here. 2017 already I told you, like what all are we are starting to end, that the same entry is coming again and again. Okay, so this is depreciation account 15,000 into 10 divided by 100, like 1,500. How, why this not coming here 6 divided by 12? Because like 2016, like look, take it this question, like here they have to purchase to here 2016. Okay, so 16 to 17 6 month only, but 17 to 18 fully whole year. Okay, so that is in 12 months fully. Okay, so that is in, didn't want to take 6 divided by 12 here. Okay, like 12 months fully completed means don't want to enter anything, fully you have to take it over. So 15,000 into 10 divided by 100, 1,500. Profit and loss account debit, depreciation account credit. So ledger we have to write means like a machinery account. Already you know how to post journal to ledger. Okay, so machinery account, the machinery word is not coming inside. Okay, so machinery account, look at here, machinery account debit, bank account credit. Bank account 14,000. So that 14,000, like another thing here also, like machinery account debit, bank account credit. So here also machinery, here also machinery, like both the amount 14,000 plus 1,000, that both the amount 15,000 you have to write it in the debit side to cash account 15,000. Another thing, like a machinery, where are the machineries came? Here, machinery account credit, like 1,500. Okay, so that machinery, again you have to see here, machinery account is credited 750. So credited side you have to mention 750. Okay, so like that wise you have to enter. This is in 16 only, don't want to take this 17th one. Okay, so 16th one only you have to take, that is in 15,000. How you have to calculate? Look at the board, like 15,000 750 minus. Okay, so here 10 minus 5, 5. Here 9, 9 minus 7, 2. Here like 4 and here 1. Okay, so 14,250. So this is 14,250 came over here by balance CD. Okay, so this is totally 15,000. Another this two thing, look at here. Now we are going to see the machinery account only. So the machinery is not over here. So next is the machinery account in credit side 1,500. So credit side by depreciation account 1,500, because machinery is credited, depreciation account is debited. So credited side, debited the word, depreciation you have to write it here 1,500. So here you have to take this amount by balance CD 14,250, like a brought down here. Okay, this is in CD closing debit, this is in BD brought down 14,250. Like this amount you have to calculate here also, take it over here, and by depreciation account this 1,500 you have to write it over here. So again I show you like this one, 14,250 minus 1,500. This 5 is here, like here 12 minus 5, 7. Here is 3, so 3 minus 1, 2. This one is coming here 12,750. Okay, so this 12,750 you have to write it over here. Another thing, like next 2018 Jan 1 to balance BD 12,750. Okay, so like this type you have to calculate all those students. Next one is depreciation account. The same thing, like a depreciation, like all the places like coming the only machinery, this places only coming like a profit and loss. Okay, so depreciation account, look at here, I will show you like a 2000. So here depreciation as account 750 to machinery account 750. Okay, so like that wise. Okay, so 2016 December 31st to machinery account 750, like 2016 December 31st by profit and loss account 750. Okay, so like that wise this is the same thing coming over in the 2017 also. So here the depreciation account debit 1500, you have to write it in the debit side like a machinery. Okay, next is the depreciation account credit, profit and loss account, you have to write it in the credit side 1500. The same thing you have to look at here. This is in 1500, this is in 1500. Both the thing is tally like both the sides. Okay, so machinery and depreciation both the things you have to tally like this only. Move on to the 8th illustration. This is in like per annum straight line method. Which method I told you, teach you, like the same method you have to take and do that. Okay, next one is the illustration 9. This is the fixed installment method. Like this is fixed installment method also like a straight line method. Look at here, like a calculate of the profit and loss the sale machinery. The first is the cost of the price 75,000, that you have to write it over here. Depreciation for 2016 to 17, 75,000 into 100%. Look at the board, 75,000 into 10 divided by 100. So now next one sir, 7,500. So that 7,500 you have to take it over here. 75,000 minus 7,500, 67,500. Another thing, like a depreciation for 17 to 18, the same percentage like they are given over here 10%. 75,000 into 10%, same like 67,000, here 7,500. Okay, 60,000 came here. The sales of price is 62,000. So here like a minus, because this is 60,000, this is 62,000. So 60 minus 62 minus 2,000. Okay, so that is in the same method of the fixed installment method. Okay, so this method is completed, students. So you have to write it the machinery account and depreciation account like a ledgers, journals. Okay, so this you have to post it and complete this method. We are going to see in the next class of the written down value method. Thank you, students.